It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, the mayor of Beckerville, the smartest man in the room, Michael Becker.
Hey, Paul.
Michael, who has, 25 plus large apartment buildings. What's the average size again in terms of number of units?
So we've done about 5,200 units, about 25 deals, so you're about 200, I guess.
Michael, who is the former banker, has gone from a loaner of money to an owner of real estate, somebody you really want to take some information from and formulate it so it works for you and in your investing in apartments. What else is going on in the Old Capital world?
Yeah, before we get into the question, really just kind of want to make sure everyone, we constantly are beating the drum, but it's going to be really kind of one of the premier multifamily events, we think. It's one of the only conferences I'm aware of that is specifically tailored for Class C and Class B multifamily investing. It's going to be the Old Capital Conference, second annual. Really trying to take our game up this year. The theme that Paul came up with 2018 is getting the game. And so kind of keeping with that theme, we're renting out the AT&T Stadium where the Cowboys play. So that's going to be pretty cool. We're going to have the 200 section level and kind of put a little stage up there, and the monitors.
We could have had 100,000 people if we wanted.
we potentially get all the way to 100,000 people. So I don't know if we could sell this one out. But anyways, we're going to have the Jumbotron, the big giant screen is kind of as a monitor. So if hopefully our presenters, if anyone has a PowerPoint, they better get their PowerPoint game up because it's going to be up on the big Jumbotron. But in all seriousness, it's going to be a great event. We're stepping up. I think our speaker last year is going to be really hard to top Rob O'Neill, the gentleman who, I don't know if we'll call him gentleman, but the man who went out and killed Osama bin Laden, a really impressive man. We got a hard keynote speaker to top because he was really phenomenal last year, really inspiring. But this year, we decided we had to get a Heisman Trophy winner, a two-time Super Bowl champion, and one of the most successful Dallas real estate investors ever. Roger Staubach is going to be the keynote speaker this year. So that's on September the 13th. It's an all-day conference. Certainly make sure you get your calendars. There's plenty of flights into Dallas-Fort Worth. You guys can either fly American or Southwest. So, put that on the calendars. Don't miss it. That's a great networking event. So definitely want to do that. And then the next thing, too, is something new that is going to have our first inaugural one kicking off. Paul's going to go out to, we have all these people always coming into Texas. So we're going to go to California this time. So Paul's kind of sponsoring the next apartment investor networking group in San Jose.
Yeah, apartment investor networking group. We do have a lot of investors that come to Texas. So instead of them always traveling to see us, we're going to go out to see them. So starting on a every other month basis, we'll do up at the San Jose DoubleTree Hotel. We invite you to go to the Old Capital Podcast and register for that. We have one of the best analysts / economists from CoStar. Going to be talking a little bit about what's going on in Texas. What's the Texas miracle? What's the reason why people live in California and invest in Texas? He's going to lay it all out to you and see if it makes sense.
That's what day again?
That is May the 2nd. May the 2nd. Don't forget to sign up for that. So in the podcast question today is, Michael, I'm a passive investor, and I'm reviewing someone else's underwriting. What should I look for as a passive investor?
Yeah, so I'll just kind of have 3 or 4 things I'll kind of touch on that, things that we think about when we're putting together the underwritings that we do for the deals that we buy, as well as if I was in the other shoes and looking at someone else's underwriting. These are the things that, I certainly want to kind of pay attention to. So really there's a few components to it. First and foremost is just kind of the revenue side of it. A lot of sponsors will come in these deals and underwrite potentially some aggressive rental rate growth projections, kind of going forward, just really kind of juice the returns. When we put our deals together, what we always attempt to do is just kind of have, we're buying properties that are, say, 10% or below market rents. So we'll just come in these deals and try to burn off the loss to lease, from what the current market rents are versus what we're scheduled on a rent roll. And the difference between those two things is called loss to lease. So we just try to fully capture the loss to lease over the first couple of years. And then going forward after that, we try to model, 2% revenue growth and 2% expense growth kind of simultaneously. So that's one of the things that we attempt to do. So, historically, over the last, 3, 4, 5 years in Dallas-Fort Worth, I mean, you've been seeing 5, 6, 7, 8% rent growth in several submarkets. So if someone was going to come in and try to underwrite that aggressive rental rate growth, I don't know how sustainable that is. Historic levels are closer to, 2%, 2.5%, something along those lines. So if you're going to underwrite 6, 7%, that's probably not likely going forward. The next thing is down in the expenses. There's certainly over the last 3, 4, 5 years, property taxes have been, real challenge for everyone across the industry. And then in Texas, it's more magnified because our property taxes in Texas tend to be a little higher from a percentage standpoint versus many other places in the country. So that magnifies the issue. So, if people come in and don't underwrite, going up to 85 or 90% of the purchase price times the millage rate, that's kind of what we underwrite to here in North Texas. And, you just got to be really specific because all that is market driven. So, make sure you understand what the taxes are in whatever market you're in and how they tend to be reassessed and how they, are they open like in Texas where you get reassessed every year and uncapped, or are they capped? So make sure you have a good property tax consultant. Every time when we do our deals, we make an assumption, and then we always try to verify that assumption with our tax consultant to make sure that we're on the right track along the way. So that's certainly something to pay attention to. Payroll has certainly become a little bit more of a challenge. That's certainly something that is going up. In particular, on the maintenance side, it's really hard to find and retain good maintenance staff. So they're getting a lot of competition from construction industries and other things like that. So make sure, you have a good payroll quote. You can't underwrite these low payroll numbers like you used to be able to. And if you do, then you're going to get what you pay for and get inferior quality staff. And then the next thing that's really kind of popping up that is going to be a challenge, and especially here in Texas, North Texas, we get a lot of hail. We've had a lot of hailstorms recently. And on the coast, we have several hurricanes. Is insurance. We get ours renew in about a month and a half or so. So we're expecting to see a reasonably large increase to the insurance rates, and that's kind of what everyone's been talking about. So make sure you're underwriting, you're taking that into account when you're looking at it. So the underwriting that you're looking at doesn't account for those types of things. That's certainly something you want to pay attention to. And then finally, the last thing really is the most speculative part of this business is really the exit cap rate or the reversion cap rate. So when you buy a deal, what is the cap rate they're using on the hypothetical capital gain when you sell it? So for example, if you underwrite for like a 5-year hold, which is what a lot of people do, when you buy a property today at a 5 cap, are you looking to exit the deal at a 5 cap or maybe even a 4.75 cap? If you're projecting to have a flatter or lower cap rate on the exit than what you buy, that's pretty aggressive. So with the further out you go, the less accurate you're going to be in that projection. It's a little bit more speculative. So we try to at least underwrite about 10 basis points in cap rate expansion, for every year that we own it. So if we buy at a 5, we want to exit, say, at a 5.5. That's pretty conservative, something along those lines. If you want to be a little more conservative than that, maybe you do 15 bips a year. If you want to be a little more aggressive, it's in a better location, maybe you do 5 or 7 bips a year. But, the point is you should be exiting at a higher cap rate than what you buy it at. So those are the things that, I would, if I was reviewing a deal and, you had something that was incongruent with what I just kind of described, that would get my antenna up, and I would question, is this really, conservative enough? Or these guys just really trying to engineer the returns to make them look a little better than what reality is likely going to be?
So you mentioned something about a line item for property insurance, and that this doesn't really have anything to do with the passive side, but it has to do with the lending side. We're looking at a transaction to go forward with on an acquisition on a property. And I wanted to go out and drive the property. And I saw what the insurance cost was. I think it was like $300 a door on an annual basis for the insurance. But when I went out to the property, they had 2 separate buildings with 2 separate fires. And I'm talking about having 8 buildings burned down on this side of the complex and another 8 units burned down on the other side. They happened within a month or 2 apart. So these are 2 separate fires, not the same fire, set by a candle and one with a stove thing. Now, we just know when you have 2 fires or you have a hail claim and you have this and you have that can make your premiums rise. So it may not show up right now, but we told the potential buyers in the deals, make sure you contact your insurance company, let them know that on the loss run, it's not going to show 2 fires because they just happened recently. But make sure you calculate it because that may bring your insurance from $300 up to $550, $600 a door on an annual basis. And that may be kind of the kiss of death that it just doesn't economically work anymore until that fire last fire rolls off, and it may take 4 or 5 years for that to roll off.
Yeah, pay attention to that. Make sure you get loss runs. It's one of the things that, we always, one of the critical diligence items we always try to get on the front end is loss runs on any sort of property we're buying. So we make sure that we got to have rules of thumb when we do our initial underwriting. But, that's one of the things we always try to challenge pretty early on and get a solid quote from our insurance broker.
Yeah, you're not going to know that until you actually drive the property and take a look. And we didn't know that until we looked at the property and we saw that it wasn't in the offering memorandum. But when we go into the property, 2 large buildings in this big complex were burned to the ground. So
yeah, if you guys have good contractors, good roofers, they know kind of the history of locations and areas with hailstorms. And certainly you're a good local commercial insurance broker also knows that stuff too. So if you're not local, you don't pay attention to that kind of stuff. Try to find somebody that does, and kind of that helps shortcut on the front end of these deals too. Some potential underwriting mistakes.
If somebody wanted to learn a little bit more about what you do, Michael, and the SPI crew about buying apartments, what's the best way of contacting you?
Yeah, the easiest way to find out more information about us is go to my company's website, which is SPI Advisory. So just go to our website, which is www.spiadvisory.com. That's SPI like spy advisory.com, and there's a contact us page. So I'm always happy to have a 10 or 15 minute telephone call with people, listeners of the podcast. And if you guys want to get to know more information about us, that's certainly the best way of going about that.
Yeah, don't forget to go to the Old Capital Podcast and see if you can download the 17-page white paper report on multifamily financing. Multifamily financing gives you kind of the platform on how these transactions are put together. You bring in the 20, 25%. We bring in the 75, 80%. We should be your best friend. See what the rules are, exactly what lenders are looking for, so you can kind of frame up how you want to do your transaction. So I think it's a good report that Michael and I wrote a couple years ago that we just updated for 2018. Download that. And then also don't forget, sometime in the second week of May, we'll have another speaker series. The last one we had with Dr. Dotzer that we had 500 plus people show up for that. Some people flew in from Kansas. Some people flew in from Northern California just to listen to Dr. Dotzer. These events that we do kind of on a every other month basis brings and generates a lot of people. So it's a great opportunity to network too. So don't forget, because Michael Becker says that these brokers and these sellers will not come to you. You have to go to them and get to know some of your possible limited partners in the future. So anything else we're missing, Michael?
That's really it. I would certainly appreciate everyone listening. And, we haven't asked for it in a while, but if you guys find this to be valuable, certainly go to iTunes or Stitcher and leave us a rating and review. We certainly always appreciate that. It kind of gets us up in the rankings and get more people able to find our podcast. And certainly share it with a friend. If you have another apartment nerd friend of yours, pass up the podcast along as well.
That's great. Michael Becker, the mayor of Beckerville. I'm Paul Peebles. Have a great day.